Are you there and you are part of a gated community? Now, in most gated communities, what most people do, we set up a small company that collects money from different owners of different apartments, and then this company will pay for items like security, cleaning, and maintenance. By the end of this video, you will understand that if you are part of a management company that probably collects fees from its own members, maybe you're not a company, maybe you're an association, but you are collecting contributions from members, I will tell you what you need to do so that all that you are collecting is not treated as taxable income for you. And by the end of this video, you will know just how to protect yourself. Nextgen Mall, they formed a company. And the role of this company was to collect money from the owners of shops. It's a big mall, so their shop, their offices inside. So this company was collecting money from the owners of shops, and they were using this money to support common areas like cleaning, lighting, and items like garbage collection, air conditioning, taking care of the lift for escalators, and so on. Now, every year, the unit owners, everyone who has a shop, used to meet on an AGM, and during this AGM, we will determine how much each of the owners is supposed to pay per square foot. So there were no outsiders. It's only the shop owners who are meeting, people who own space, they were meeting and deciding for every square foot, this is how much you contribute. This company made no profit. In their understanding, they were simply taking money as a caretaker and helping pay service providers. So, because they were not actually providing any services to outsiders, they never registered for VAT. And when they filed their income tax returns, they treated this member contribution as something that is not taxable. Now, for years, this arrangement didn't raise any suspicion from KRA. The company continued collecting this money and submitting nothing as income tax. Then, the Commissioner of Domestic Taxes conducted an audit. When KRA did this audit, they did an additional tax assessment of 119 million. The 119 million was around 38 million in income tax and around 81 million in VAT. Now, this company was tired because we, according to themselves, were an abiding citizen. This company had been making returns to KRA and they thought they had made the right returns. When they were talking to KRA, they explained that the contributions were set by the members and their contributions not income. They also say this is not something that is set up by market forces. There is no outsider who is making any payment. They added another complaint. When KRA is asking them for records, they sent the records to the wrong email address. So this company didn't provide the information to KRA because they never received the request. If KRA was reasonable, no one would fear them. And we know we all fear the taxman. So they did what they felt was necessary. What KRA did is confirm the assessment in full on around 3rd November of 2022. But the company was no pushover because this is not what we fought freedom for. This is not why Mau went to the forest to fight. So, to appease their ancestors, the company appealed to the Tax Appeals Tribunal. And the ancestors were happy. But KRA was unmoved. They had been through this route before with other people going to the tax tribunals. So KRA went there as well. Now, at the tax tribunal, KRA's response was powerful. KRA pointed that the company's own Memorandum of Association, which stated that the company provides management services, including managing units in a commercial center. So you see, it's providing management services. To that, KRA said that's a real business. Additionally, the company had charged a fixed fee of 35 shillings per square foot. This is not a contribution. This is something that had been fixed. So, in real sense, the company is charging a specific price for a specific service. And under the VAT Act, that counts as a taxable supply. We know it's not mandatory to have registered for VAT, but because the total turnover from that fee had not exceeded the VAT registration threshold of 5 million, KRA said that the company was required by law to register for VAT. Their failure to do so meant that KRA should be able to register them compulsorily. And because the law allows that, KRA went ahead and did that. Now, after that argument, KRA officers sat down, smiled, and with deep satisfaction, they waited for judgment. Because it was around Christmas and they could smell Santa was around the corner. Now, the tribunal evaluated the case from the company and from KRA. They found that the company had failed to produce several key documents, like the Memorandum and Articles of Association. They also failed to provide a VAT exemption certificate. Additionally, the company did not provide detailed clarification of the activities, and they did not also produce their general ledger. And without this, the tribunal could not verify what the company was claiming. And that is why on April 26, 2024, the appeal from the company was dismissed entirely, and the company was required to pay 119 million. As KRA was celebrating that the budget deficit for that year will be covered, the company was on the other end burning the midnight oil. That amount, 119, in their eyes, it didn't count. The decision equally, and according to the company, that position could not stand. And this is where it opened a second round of fight with KRA. So the company took the same documents and went to the High Court. As the company appealed to the High Court, they made the same argument. First, they argued that the tribunal had overlooked key documents that they had actually submitted. When the tribunal said that this company had not provided the general ledger, the company argued at the High Court that the documents were there and presented, and they could show that these documents were presented in black and white. The company also said that the tribunal had either failed to look at the documents or they had ignored those documents altogether. Now, presented with such a case, Judge Benjamin Njoroge examined all the records now from the company and examined them carefully. Once he looked at them, he found that the company had indeed submitted the memorandum and the articles of association. And to make even matters worse, KRA had actually acknowledged receiving both documents. The company had also submitted detailed clarifications. They also provided sample agreements, and they also provided minutes from the AGM from 2017 to 2020. Remember, all these fees are set during an AGM. Yet, the tribunal judgment said that the company had only supplied sale agreements and lease agreements, but the company had failed to produce other documents. And this, from the tribunal, was incorrect. Now, faced with such evidence, the judge concluded that the tribunal had made a big error by either ignoring or overlooking the documents that had been presented and available on record. Now, it was getting close to Moide, and wenzetu wengi kwa mazingira hii whatever that holiday is called. On October 9, 2025, the High Court set aside the tribunal's judgment, and what the High Court did is to send the entire back to the Tax Appeals Tribunal for a fresh hearing. But they requested a new panel altogether, not those members who had had it before. And the good thing for the company here is the 119 million assessment was not confirmed. And the case went for a review back at the Tax Appeal Tribunal. So make sure you are following us, and we shall alert you when a decision is made on that case. And this is the lesson for you. If you are out there and you manage a property, or if you are out there and you run a resident association, or you could be having any form of a management company that collects fees from members as contributions, you need to ask yourself this question before KRA asks it for you. And this is the question. Does your memorandum of association describe what you are providing as management services? Secondly, do you charge a fixed fee per unit or maybe per square foot or per square meter? If the answer to any of those questions is yes, you may be providing a taxable service regardless of the fact that you are not making a profit and you are only collecting contributions from members and any excess is retained within company. Another thing, the VAT threshold of 5 million in annual turnover, it's not very difficult to cross for a management company that is serving around a medium-sized development. So what you need to do, if your annual service charge collections is exceeding the 5 million, you may be required to register for VAT, whether or not you consider yourself a trading entity. On the documentation question, this case is one big warning and one big reassurance at the same time. The warning is that if you do not submit your documents properly, the tribunal may decide against you. But the reassurance as well is that if the tribunal overlooks any of the document that you had provided, all is not lost. You can make an appeal to the High Court, and the High Court can correct an error that was made once you appeal. But High Court route is very expensive and it's a slow process. So what you need to do is make sure first you are keeping the right records from the word go. Secondly, ensure that you submit all the documents requested by KRA and submit them properly the first time they are requested from you. And don't end there. Make sure you are keeping proof of every submission so that you have evidence that you actually provided these documents to KRA. And if you're out there and you manage a property or run a service charge engagement company and you have never reviewed your VAT and income tax position, this is the right moment to do it. Reach out to us and we shall be able to help you understand whether your activities are crossing into the taxable territory, and if they are, what you need to do to protect yourself. The next video, I'm going to explain what exactly happens when you inherit land and try to sell it. And whether KRA can tax you on the full sale price because you paid nothing to acquire the property. Because there are two landmark court cases and one parliamentary amendment that have now settled that question of the amount of tax you need to pay. And if you are there as a Kenyan and you have inherited a property, you really need to understand the answer. Watch that video next.